Welcome to Tinks Invest, where we talk about investing, finance, and professional development. As a recording time of 11:48 a.m. on Eastern Time, Ethereum could trade $3,318, down about 1.65% so far. On the overall crypto market, see clearly we're kind of a mixed bag at the moment. Some micro affectation, but majorly, the macro factors that's driving the, normalization, not really a correction across the entire market, is due to the PPI report that came out early this morning. And the PPI report is basically a producer price index report measuring the wholesale price for goods and services. But on a high level perspective, the wholesale price jumped nearly 10% in 2021. And this is another sign of the growing inflationary pressure that we've been experiencing so far. And this is not a surprise. We saw that from the CPI report, which focused on the consumer price yesterday, which was a historical record, right? And beside this specific number of rising by 0.2% based on the report that I see here in December, it's a little bit higher in comparisons to the 0.4% of estimates based on Wall Street consensus. So we missed it by almost double if you think about it, but it's like obviously it's a small percentage in digit perspective. And if you look at that historically, for 2021, this is basically the biggest on record in data. If you date this back to 2010, so 11 years ago. And with respect to the weekly jobless claim, it totaled to be approximately 230,000, which is way above estimates. And this is basically one of the highest numbers we've ever seen since 1973. So this number is the biggest mover in terms of a macro affectation on driving the sell-off or the correction that we're seeing in front of us, right? And the reason is because the job mandate is the critical piece that Jerome has to be triangulating the tapering, which also triangulate with respect to the interest hikes, right? So I got a very relatively insightful question this morning. Is with respect to the interest hikes, right? Seems like the Fed has laid out there's going to be 4 specific ones this year. But is it going to be happening on a quarterly basis? Is it going to be happening on a monthly basis? What is it going to look like? Like, how are they going to be doing it? And to be honest with you, this is not a confirmed schedule because of the fact that these are reactionary type of a maneuver that the Fed has laid out, just to give people a heads up that contingent on the job numbers, right, which is their core mandate, contingent on the economic outlook going forward, right, because the COVID is still something that is up in the air, is uncertain at the moment, that with the interest hikes, it allows them to use this as a sort of a reactionary element to counter the cash balance that they have in their balance sheets, right? So it's kind of like a lever that they're using to pull or push going forward. So it's not confirmatory in terms of what's the timing for it, right? But logically, it will look like sometimes around like per quarter, right? Because it makes sense, right? And we'll see how that goes, right? It's not going to be that logical, like going to be just sprinkled across like every single 3 months or every 4 months or every 6 months. It won't happen like that. It's going to sprinkle across whenever the Feds believe it's the logical time to react according to the market dynamics. So something to be mindful of, right? So right now, with respect to Ethereum, let's just dive right into the technicals right now. It's a recording time of approximately noon on the Eastern Time. Ethereum contracts $3,306, about 2.06% so far. And with respect to current level right now, we have broken below the 3,323. We're still in a relatively good setup right now. We're just obviously normalizing from the previous 2 days of surge. You see these 2 green candles. And right now it's either we go down to the 3,158 or stay back above the 3,350, which is basically we're below right now. But the real level we need to get up to get to the next platform consolidation would be somewhere around 3,475. Right now it's at the 35 out of 70, so still a relatively upper echelon of oversold. We're still crossing up right now, so momentum is still coming. But again, right per my first video earlier this morning, and something that I've been mentioning in the past, is that you can only go up that many days, and we've been up for the last 3 days so far. Today's Thursday, tomorrow's Friday, so typically on Friday and the weekend affectation, people like to take profits and just run. And that shows you like the ratio between long-term investors versus short-term investors. So something to think about, but ultimately we do not time the market. We look at the psychology behind the chart, we look at the technicals, compare that with the fundamentals, and we know that the levels that we identified so far, 3,150, seems like another attractive level for us to get down to. Do we see 2,850 anytime soon? I would say possibly, right? But I think that will be the last dump, possibly, right? And I will give that very low probability until we regain momentum to go up from there. But I would say based on the fact that collectively this week we've already encountered so many different hurdles, and I think we all have been practicing that mental stability on our sides, right? Using just logic and not emotions to play the market. And we're coming out nicely right now. So today is just a reason for normalization, which is another cool day for us to reframe our perspective and just stay collected and continue that organic growth going forward, right? So a normalization day, a correction day is very healthy and very normal. So respect to Bitcoin right now is now about 1.34%. At the moment, it's at the I'll say we're still there, approximately. Obviously, we're like about $600 below. And right now, it's either we go up to the 48 or we go back down to the current level. And why? I think we just consolidate current level. We're at the 39 out of 70, so still relatively oversold. We're from the golden cross right now. So I think we might see a little bit more volatility ahead during the weekend because of just people taking profit. But if there's no negative news or just lack of news in general, we should be gliding just on an upward swing based on just the technicals. Contingent on no more black swan news, obviously. Dogecoin right now is up about 2%. At the moment, I would say anywhere from the 14 to below is still better. Right now, the 50, so I wouldn't suggest buying in at this RSI scale right now. Cardano's down about close to 4%. We're in between right now, 125. It's either we'll go down to 119 or 134. Right now, I think 119 is probably better because right now it's already showing signs of reversal. We are still relatively on the upper echelon of neutral, so just near overbought. So I wouldn't really suggest buying at this level right now. There were obviously much better level days ago when we're depleted below 119, obviously. Solana is at 153 right now, so attempting to break to 155. So you see clearly 155 was the level that we got to. We got above just a little bit, but we were levitating, so that's why we kind of hover back down, right? So I'll give that benefit of the doubt that we're consolidating at a sideways fashion at a comfortable level right now. At the 43 out of 70, so not at the extremely overbought or extreme oversold, just neutral right now. But again, 133, 155 are the two frames, but I would prefer 113 from here based on the current setup. I think maybe 133 would be a logical level to incur risk. XRP is currently up about down about 1.5%. 78 would be the consolidated level. That's exactly where we're at right now. 42 out of 70. So as we cross up, which we're about to do so, we should have a good shot of going to 88 if there is like no negative news or just lack of news in general. But just remember that this could potentially happen on Sunday or after the weekends, obviously, because of the weekend expectation. Polkadot is down about close to 3% right now, anywhere from, I would say, 24 to below is still better. Right now, it's not the ideal level, it's the 50 out of 70. ALGORAND's down about 5%, still out of 50 out of 70 at the moment, so ideally, again, 136 to below is still better. Shiba Inu is at 3,000 right now. Again, I would still touch it at the low 2,000s. 1400s to 900 from here. MACD down about 3%. Again, 175 to 143 from here. AVAX down about 2.3%. Again, with respect to the current level at the 46, I don't really like this. This is not optimal level. So 81 to 60 are still better. With respect to Luna, 81 right now. So this is relatively overbought at 53. So 62, 52, 45 from here. And I saw that Virgin Galactic has sold off about 16% today. So let me just take a look at it real quick with respect to Virgin Galactic. So Virgin Galactic, where is it? Space, there we go. So we're down about 16.86% right now. We are rock bottom, 26 out of 70. And the reason we're selling off is because they're raising 500 million in debt, which is a capital raise. So whenever corporate companies are raising debt, is because they need to obviously replenish to sustain their operations. And investors typically will look at that as a sign of weakness of a company because they, oh, why you need to incur debt? You're running out of money or something, right? Especially for a very relatively nascent company like Virgin Galactic. But fundamentally, the business has not really shifted, right? It's just that this is a financial mechanism. They are doing some capital reorganization on their capital structure, right? So this is not really a hindrance onto the long-term value proposition. So I would say today is a green opportunity to buy. Obviously, Virgin Galactic is a space travel company, so it's a little bit more volatile than other companies because there isn't a lot of comps or comparable companies that are in this place, right? So I would say it's not a terrible risk management level for $42 cost average. I talk about dollar cost average. So I actually made some revisions to our Patreon. So in addition to the list of obviously DCA and obviously buy, sell, hold signals, I also include a dollar cost average scale, right? So you have fair, attractive, and steal. And based on my personal preference, this is how I'm basically allocating my cash reserve, right? 5 to 10% when it hits fair, right? Attractive, 10 to 15% of your cash reserve, right? Steal is when you hit about 15 to 25% of your cash reserve, right? And you could add this on the spectrum, right? So 5 plus 10 plus 15, so that's about 30%. So you could either allocate 30% of your cash reserve to buy at the respective levels, or you could allocate 10 plus 15 plus 25, that's 50% of your cash reserve to dollar cost average at the according level that we have identified for the respective crypto, but obviously for the stocks that we are adding, right? It seems like the list for both crypto and equity are getting quite comparable. They are, like, I would say it's like 40 stocks and 40 crypto that I'm updating on a daily basis on both a buy, sell, hold, and also obviously with the risk management levels, right? So hopefully these are helpful for my patrons, and I appreciate for your insights and your questions every single day. In respect to the risk management level, these are the levels that I identified so far. So let me know if you have any questions. So today I would say is one of those last hurdles. People looking for a reason to take profits because of this 2 consecutive days of just gain so far. So it's only logical. I would say today is more of a normalization rather than an actual correction. And it's very logical what's happening right now. So appreciate you. Let me know how it goes and take it easy. Bye.